Good morning, everyone. My name is Paul Young. I'm just going to walk you through the Canadian manufacturing sales trends for March 2016. This overall presentation is going to give you a quick snapshot of what's going on in terms of the manufacturing sector in Canada. I'll also talk about by province and give you an idea what's going provincially, as well as what are some key drivers to watch out for as we go in 2016 and beyond. So this presentation is only one perspective. You're more than apt to go out to different websites like the banks, like Bank of Nova Scotia, RBC, TD, CIBC, the different banks to get a perspective. So, as well as Stats Canada to get different information in manufacturing. A little bit about myself. I have my own YouTube channel. You're more apt to follow me on that to get more updates. I do videos on government policies, economic trends, as well as financial solutions. So I'm going to talk about key executive summary. I'll talk about key sectors. We're about giving you a summary. I'll talk about prevents, what's going on there, as well as an outlook. So if we look at a headline, and normally when they look at these stats, they look month-over-month comparison. So when you do a month-over-month comparison, March is actually decreased from February in 16 of the 21 sectors. So everybody's going to get up in arms and say, okay, it's not been good the last 2 months. Yes, we've seen a decrease, but we were on a considerable bigger pace back in January. You probably could go back as far as November, December in terms of the pace we were on. So those paces probably were not sustainable. So maybe what we're seeing is a market correction and all that. So that's one of the things you want to look at. The other thing is you'll notice here too as well as inventory buildup. So that means the supplies on hand for businesses in terms of what they're trying to do to basically manage things is marginally down from the previous month. It's still down compared to January, so there's not a huge buildup of inventory, which makes sense because many companies do not want to carry a lot of cash tied up in inventory, so they're probably managing things based on a sluggish forecast. Now if you look at the sectors here, and I technically always look at an average. So we're averaging about $51 billion worth of manufacturing sales in Canada. If you compare that to the average of 2015, we're up 500 million over the previous period. We're down from 2014, but if you look at things in terms of perspective, and you look at the sectors, the energy is the sector that's been hammered the most, and you're seeing that with this particular stats here. We're hitting around $7 billion a month in the energy sector. We're now about 3.7 billion, so we're about half of where we are there, and that's significant because it's contributing to the decrease in manufacturing sales. However, other sectors, especially transportation, food manufacturing, forestry, have picked up a lot of the slack that's basically driven by lower energy prices, and that's a good thing. However, those slacks tend to be down a little bit because we've seen a slower in terms of retail sales the last few months to drive automotive production has been down a bit, and that's what you're seeing here. So the trend line with automobile production is, if you base it on the last 3 months, the run rate, we would actually be hitting around 17.4 million units for 2016, which is about down about a million units where it was last year, and that's driving manufacturing sales. And in key provinces like Ontario and Quebec that have key sectors that support transportation. Okay, and that's something to bear in mind when you look at the sectors. Provincially wise, Ontario and BC are carrying the bulk of the manufacturing sector in Canada, and you'll see that by looking at this trend. We've seen a big decrease when you look out in provinces like Newfoundland, Saskatchewan, and Alberta, because those ones are predominantly driven by oil, and that's what you're seeing here in terms of things. And that the right hand side of the chart gives you an idea where you're seeing some of the sectors. The other area that's concerning is in Quebec, where aerospace seems to be down a bit right now in terms of new orders for aerospace products. The good thing is with Nova Scotia, we're likely to see considerable improvement there as the frigate contract kicks into place, as well as you're seeing the trade agreements benefit Nova Scotia through seafood exports and agricultural products that's benefiting them as well. Now, what's going to be some of the issues faced here? Overall underlining issue is we're hitting periods of slow economic growth. We were already hitting that before we had some traumatic actions the past few weeks. The Fort McMurray fire is actually going to show a decrease when we start looking at the April and May sales trends based on the lost production due to the fire out in Fort McMurray. Automotive production is down to about 17.4 million. Now that might be just an anomaly for those period of time, but it's something to bear in mind as you watch forward. Other things to look out long term: the Ontario government is proposing a huge change in climate change policy by phasing out natural gas. Now this is considerable issues here in terms of the structure of that. It also is going to make competitiveness in terms of the manufacturing sector even more difficulty. Now the upside is it will benefit anybody that makes solar panels, wind turbines, anything to do with biomass. It will hydroelectric possibly too as well. That area might benefit. Strong housing market, that's benefiting the forestry side, and we're seeing a big return in the United States especially. The budget's been approved for federally, which will see money trickle down into transit projects and clean technology. Those are areas to kind of focus on in terms of thing. But the old seasoned business, whether it's steel, automotive, will see considerable amount of pressure on investment, as well as driven by retail sales. We've seen strong retail sales in Canada for the first few months. Now, is that sustainable? We're likely to see a clawback down to 1.5% to 2% for the remaining part of the year, so that will impact manufacturing sales. The U.S. economy is the same way, where they're seeing retail sales, but they're not growing at a exuberant pace, and that's something else to bear in mind, because manufacturing sales in Canada, we export 75% of everything to the U.S., so the bulk of our manufacturing sales are going exports. And we're seeing a decrease in exports and pressure on exports because the world economy is not growing and it's sluggish, but we're also seeing less demand in the U.S., and that's impacting trade deficits, which basically manufacturing is part of the overall export strategy. Now this is one opinion on manufacturing. It's something that I wanted to clarify with people, is that we are in a period of slow growth. You cannot look at 1 month, you have to look at averages, but you also have to look at the underlying data, and that goes back to retail sales, it goes to housing starts, it goes back to exports. Those are all driven by economic growth and consumer spending. And if we're in periods of sluggish growth, there's going to be pressure on businesses to control cost. Controlling cost means is they're going to manage their business inventory and their operations to align to what they believe is the capacity they require to expand their business. So you may see less capital investment. You may also see relook at their operations in terms of rationalization of production. You could see that happen throughout this year. So it's something to bear in mind as you're watching the trends. Thank you.